discuss the markets really quickly. We have a very strong up day. The market has pretty much went up every hour, it feels like, since the beginning of the trading session. The only thing that has been showing a little bit of weakness, but I guess you can't really call it weakness, is the RTY, the Russell. It's been going up and then it's been going down to the lower teens. Right now it's in the upper teens, so we'll see how it plays out for the next 45 minutes of trading. But the S&P is on its all-time highs. It just crossed over 4,000, as you can see here on this chart, and it's just it slowly creeped up. It never really went down more than 5% since its high, its previous high. Now it's obviously this new high that it hit today, and we'll see if it goes even higher in the next 45 minutes. All right, so I know it's a number of you probably have some issues that you want to bring to this pop-up live trading and see if you can get it fixed. So let's do that. But before we do that, I wanted to provide a couple of trade ideas. The first trade idea I was looking at right now is doing a no upside risk iron condor in the ES. This is the S&P 500. I was looking at 36 days to go to kind of diversify our expiration periods, and looking to sell the 30 delta 5-point wide on the call side. The most you can lose on this side is $250 because it's $50 per point. So 50 times 5 is $250. And then what we were doing here on the put side was getting more than that to make sure the credit we receive is more than 250, so we can have no upside risk. So we're selling a 15 delta at the 37.50 and buying about 60 points lower, exactly 60 points lower at the 36.90. This is a 12 delta that we're buying, and if you look at this curve view here, you can see that we have no upside risk. If this is a skewed iron condor that we call no upside risk iron condor, if it goes up, we're going to win 100% of the time. If it goes down, we can still win as long as it doesn't go past this short strike here, this 37.50 for the basically. All right, so let's look at this and let's see if we can get filled. It's requiring about $724 in buying power, and let's see if we can get filled on this. We're going to send it, and that we're going to have that sit there for a second. And then I was looking at a Facebook trade this morning, or this afternoon. We have 22 days to go. I was looking at with Facebook, and you can see that I was trying to do an iron condor, but this is not a no upside risk iron condor. This does have risk to the upside. But I was looking at the chart with Facebook, and it's been going up quite a bit, and not that it can't continue to go up, but I wanted to play a skewed iron condor a little bit, but still have risk to the upside. The high was at 304. It looks like it's on its way there, and you can see that we gave it a little room here. You can see that this is the 330, 335, and expected move is plus or minus 16 for the most part. So this upside is quite a bit ways away, still another 10% up basically. So, and then the put side is a little more aggressive. It's at the 20 delta here, betting that it's not going to go up too much and it's not going to come down too much. So this is the trade. I'm going to put this in at, let's see if we can get filled. The mid is 135. Let's see if we can get filled at 140. And we'll see how this plays out. This is way more than 12% on your buying power. And there we go. And we're gonna let that sit for a second, and then we'll see what we get filled on. But I know it's a few members that probably need some help with a couple of trades. If you do, please unmute your mic and present your issue, and let's see if you can share your screen, and we can see if we can fix the problem that you potentially have.
O'Brien, do you want to look at my XBI trade?
Yes, please. Please.
You see my screen?
Yes, we can.
Okay. So I have the XBI at 40 delta on the call side.
Mm-hmm. Okay, so you got a 40 delta on the call side. It's going up a little today, and so you're at a 36 delta now. let's look at moving it just a little bit, Steve, just a little bit. So when I say just a little bit, maybe 1 to 2 points, and let's see how much that cost. So if you move it 1 point, let's see that first. So you move it 1 point, and so sell that one, the 141.
Yeah.
You had it right. So sell the 141, buy the 146. And so that's going to be about $17 to do that. You only got one contract. So that's now move the 141 to the 142. And you go from a 36 delta to a 28 delta and then move that. Perfect. So that's going to be about, let's just say, give or take after fees and commissions and so forth, about $40. Right. So hit clear from me, Steve, and then let's go to the put side and see how much you can get if you bring that upwards. So how wide is the spread on the call side? Can you show me that again? I'm sorry, I missed it.
5 here and 10 on the side.
Okay, so it's 10 on the put side. All right. So we can actually increase the call side without touching the put side, increase the call side width, and that can probably pay for the trade. So let's look at that, Steve. So it's not increasing the risk. It's actually reducing the risk if you can get a credit. So move it to the 143, sell the 143, and buy the 153. All right, so that's a debit. So let's move it to the 142, and then buy the 152. That's still a debit. So it's a small debit, right? It's only 40 cents. So let's do that again. So move it to 143. Move it to the 143, 140, 153. Correct. And this is what I would do, Steve, and I would send this at the 22 because you'll be able to get this amount by not bringing up the put side too much. So this is what I would do. Or you can do the 142 and it's only a $4 debit. They're still both good, right? So
So Brian, you are suggesting 28 delta should be okay because it's just 15 days to
correct.
expiration?
I think it'd be fine. I think not that I'm going to be right, but I'm comfortable with the 28 delta. That's in the yellow zone. Okay? And
Yeah.
that's still, that's still what 6 points up it has to go. So let's do that. Yeah. So send that.
Okay,
All right, perfect. So now if you go to XB, if you go to XBI on the history for everyone, go to your history tab for me, Steve. Your
Why didn't it change your Brian? I thought this would be on there. No?
it's go to activity again. It should have changed. So it's probably some error. So log out really quickly and log back in.
Oh.
Hold on a second before you do that. Hold on a second. Remove that /IF there, and then go to working. So it got filled, and you got filled at 1 cent. So we shouldn't even move the put side to this point because it's basically a break even, right? You don't even need to finance this. But if you sign out for a quick second and sign back in, it should remove that.
Where do I do that again?
So do you know your password, Steve?
Yeah.
Okay, perfect. So then sign out at the bottom. And then just sign back in as fast as you can. Do you have two platforms? Do you have it open twice or something?
Uh, Let me check. I see that's possible with TastyWorks,
I
right?
think that's a
But I realize.
screenshot.
Oh,
think
that was
that's
a
a screenshot.
screenshot. Okay, I'm sorry. All right, that was a screenshot. Okay, so log back into TastyWorks as fast as you can, Steve.
Yeah, checking something, update or something.
All right, so does anyone else
But I,
have an definitely have more than one up
No,
now.
I don't feel like it's possible to open a lot of instances.
Okay, so does anyone else have an issue that they, if you do, please get ready because we're gonna be done with Steve in probably like 1 minute once he logs in. All right, so um, go to back to that XPX. There you go, and now click on the 15 days, and there we go. So it's showing the correct now. So some little glitch, I don't know what happened, but that's the situation. But you're good now, right? You're still only at the 12 delta on the put side, or is that the 5 delta? If you wanted to move the put side up a little bit, you can to get that $1 back, but it's not necessary. But if you move it to you buy back your put side and move it to the 128, you couldn't do 128 108. So you might as well just leave it there for now. Okay.
Yeah, I think, yeah, I need to pay commissions. Maybe I'll make till one.
Yeah, you're good. It's only you did the adjustment for flat. So I think you're good on that. You go to the positions area, Steve, you still can make on this if you go to the cost, you can still make 271. So you still got a chance to win. Obviously, you're not going to get you're not going to get all that 271 because you're going to get out of it. But that is your position is a lot better now. You're back in the yellow zone, and you was able to do it for basically flat. All right. So
When quick question, if Farnham stays the same, so I should make like $8 per day, right? At least $24 by Monday. Is that what it means?
say that again. I'm sorry.
If assuming the other things are constant, this represents that I should make $8 per day on this contract, right?
Correct,
So from
correct, exactly, exactly. Based on if everything was is all equal and it was constant, yeah, you would make $8 basically a day based on time decay. So next week you should be able to see if it stays around this level, you should see a lot of premium come in your direction. You're actually doing okay today with this position, even though you were at the 40 delta, you're still up on the position at $20, as you can see for the P&L day. You're still up on the XBI for today. Okay.
Yeah. Thanks for that.
So you're very welcome, Steve. All right. So does anyone else have any issues that they want to bring to this pop-up live trading? If not, I'm gonna jump back over and we're gonna see if we can get filled in some of that stuff that we were looking at.
Oh, Brian, just real quick, I wanted to ask you, Facebook trade that you made, you put it in at 140, $1.40?
Mhm.
Yes? Okay.
Yeah, yeah. I mean, let me just double check here, Norman. I put it in $1.40. It's around that price right now, but we haven't got filled, and we haven't got filled in the ES one. I'm going to force the ES one here for illustration purposes. I'm going to get filled. I'm going to drop this down to 650, and we should get filled. And if I drop it down to 650, we're still going to get to 325, and we're going to get 311, and we're going to send that. And we should get filled right away, and I am wrong. That is I thought it was fluctuating between 675 and 650, and normally if you go that 650 you will get filled, but it hasn't filled us yet. This Facebook one is still right there. I want to get filled, and let's drop the Facebook to 139 and see if that will work. See which one we get filled in. Whichever one we get filled in, we're canceling the other one, everyone. All right, so anyone else have an issue that they want to bring to this live pop-up before I continue with some other trade ideas?
I have.
I'm sorry, I just put you on mute. Can you do that again? Can you unmute again? I'm sorry.
Sorry, I don't know if that was me. Oh, Brian, I hate to do this again. It's something that we worked on yesterday. The Vanguard ETF is at 46 delta.
Okay, so shot up some more, huh?
I think we got it down to 42. I can't even remember, 42 or
Can
something,
you
and
in
share?
1 second, yeah, share your screen for us, Dana. Okay, and all right, so this is you're at a 46 with the 70, but this is one that you're gonna have to let it sit for a little bit,
Okay, I'm good
Dana,
with that.
because as you can see, if we move it, we're not going to be able to pay for it without bringing that put side up more. But you haven't been breached yet. It's up another $3 again today, like everything else. It just keeps going up. But
Can
you're
I
going to have.
can I ask you if the stock, if this being a stock is can something be assigned during a holiday or a weekend as a stock?
It can, but the probabilities of that are almost zero, Dana, because I'm not going to say less than zero, but it's pretty close because it's 50 days to go. You are out of the money right now, and you looks like you will be out of the money by the end of trading right now. So it cannot, because the stock is going to stop trading. So no, you will not have. But even if you were in the money, it's 50 days. Even if you were in the money, it's 50 days to go, Dana. So the likelihood of you being signed is almost zero. Okay, so that wouldn't be a concern of mine. So I'm going to take the screen back because you're okay with that for now, Dana.
Okay.
And I'm going to show something that just to give you guys an idea. I mean, I could be assigned, but you can see on this CCIV it's been a dog that we're still trying to fight. We're in a good position right now. We've made a little money the last 2 days on it, but we'll see, right? But you can see that both of these are in the money, right? And if we go over here, you'll see that it's in the money in an interesting way because we're inverted. So you can see that the call side is in the money over here, and the put side is in the money over here. But I'm not concerned about. I mean, I could be assigned, right? I have a higher probability of being assigned because I'm in the money on both areas, right? And it's only 8 days to go. So I could be assigned, but I'm still betting that this is less than a 10% chance I'm going to be assigned. And if I am, then I'll just deal with that, close the position out, and so forth. But this is just an example to show you that I'm not worried about being assigned. Okay, not that it can't happen, it's just not a high probability.
Question. So Brian, if it's inverted, does it your risk increase from the spread, the width of the spread? Does it increase because you can be assigned?
So I still have these these long legs that I can always buy back and so forth, or exercise as well if I'm assigned, but it's no additional risk until it becomes, let's just say it was really close to in the money, or it's in the money at expiration. Then I have the risk, right? Because I could, if I'm assigned and these long legs go away, because I'm assigned after the market closes, let's say during expiration time, 8 days from now, then I'm at risk, right? Because I'm going to be assigned on both sides. But that's not going to be the case because I'm going to be out of this. I'm going to roll it out or whatever the case would be. I wouldn't take this to expiration in this situation. But the risk is not any different. Actually, the risk is okay. That's why you see I'm
The
up
max
on this.
loss is still the same. Okay, it's interesting.
Say that again.
The max loss is still the same.
The max loss is still the same. So this is the analyze tab of this trade right now, everyone. Or this is to break down the curve area of this trade. So this flag is where it's currently trading at. I can win if it goes down, and I can win if it goes up. As long as it doesn't go down too much or go down too much or go up too much, I can still win on this trade based on the premium that I received. So that's why, even though I'm inverted, I still have all this green area, I can still win. So if this thing just settles down for a little bit and theta comes out of it, I'm going to win on this trade eventually, finally. But it's been volatile, so maybe we're gonna have to roll it again. But we're gonna keep fighting it a little longer, at least, to see if we can be profitable on this. So we got $52 that we've won, to this point today. And if we go to history, you'll see what I need to close this out at. So we go here and we type in this CCIV, and then we go back, let's say 160 days. We haven't been in it that long, but it'll just say we have. All right, so this is the credit we've received so far, 577. This is the fees and commissions that we've paid. So quite a lot. We had to adjust this a lot, right? So 577 minus 106 minus 30, let's just say. We have to buy this back for 441 to break even, right? So we have to buy it back for 441 to break even. Anything, buying it back for anything under 441, we will win on this trade after it's just been a disaster, right? It went down 50% when we had it on, or more than 50%. So if we can just get premium out of this, it's only 8 days left, and we got the weekend, and the market is closed tomorrow. So if Monday, I might be able to get out of this with a profit on Monday or Tuesday. Hopefully Tuesday, no later than Tuesday, and we've rang the register and we moved on from this trade, just trying to break even on it, right? But we'll see. It might do something crazy again on Monday or Tuesday, and we'll have to roll it out to extend duration, and hopefully eventually it'll settle down. It settled down a little bit the last 2 days. That would be nice if it continues. All right, so let's look back over to this trade here. Its time is running out. This Facebook one is dropped on us. This ES one is not going to fill, but we're going to force this time and drop it to 25. I still like the trade, and we're going to drop it there. We're still getting 312, and we're going to get filled this time. All right, so we got filled on that. We lost obviously a little bit because the mid is a little better than a little higher than that. And then this Facebook one, you can see everyone. I'm going to cancel this Facebook one because we don't need it now. If anyone else wants to do it, that's fine, but I'm trying not to use too much in this account at this point. We've already did this. We already did that naked long dated position earlier today on the account update. We did the naked put long dated 295 days ago. So I don't plan on staying in there this very long. I shouldn't did this for holding up money that long in this size account. So once we get a profit of about, $15, $30, $40, I'm going to ring the register just to move on from that trade, but you can keep it longer. I think it's a very, very high probability trade. I actually love it. I just don't love it for a small account to hold up buying power for that amount of time. So
you're talking about, I'm sorry to mean the Facebook trade you're talking about, correct?
I'm not talking about the Facebook trade. The Facebook trade is perfect.
Okay.
For a smaller account as well. I'm not talking about the Facebook trade. You can do the Facebook trade. I'm not going to do it in this account because we just got filled in at ES. Okay, so we got filled in at.
I'm going to do it. I'm just waiting to get filled.
Okay, perfect. You don't have to force it. Maybe things will come down a little bit at the end of the day, but I would be surprised. It's been nothing but up for the most part all day. But that is a I think a pretty decent trade. All right, so we got about 20 minutes left in the market. Does anyone else have any questions or any issues they want to bring to the floor before we're done?
O'Brien, what was the call side of the ES trade?
Okay, good question. The call side is the 40-30. We sold the 40-30. Excuse me, 40-90. I'm sorry. So sold the 40-90, bought the 40-95. Sold the 40-90, bought the 40-95, and let me show you this on the trade tab here. And what we did, that was with I think we did 36 days. I'm not mistaken. Yes, we did 36 days, and we sold the 40-90 and bought the 40-95. And then on the put side, everyone, we sold a 60-point wide at the 15 delta. That's 37.50. We sold and bought the 36.90. It's a 60-point wide spread. We received just under $300. I just say $300 for it. The most we can lose on the upside is $250 if it shot all the way through and we had the max loss on the upside. That's what we would lose is $250. So if we held this all the way to expiration and it kept going up, we would still make at least $50. Okay, so that's why we're doing this no upside risk trade. But if the ES slows down, it's at its all-time highs. If it slows down, premium comes out of these options, we can make a really decent profit of $150 just taking off it at 50%, everyone. So we received 300, half of that obviously is 150. This would be a great trade in probably, let's say 20 days or so. We're in and out of the trade, $150 with this trade. But if it shoots all the way up, we do not have to worry about losing if it shoots up. So most people, most members who are new and not accustomed to adjusting and playing that call side, when you do something but to get short delta, you should do it in a way you do not have any upside risk. This is one of the ways you would do an iron condor and not have any upside risk. Another way to get some short delta is just buy a put spread, and then you don't have any upside risk when you do that. When you finance that put spread, buying that put spread by selling something like we did in the ES, I think we did yesterday. Yes.
Yeah. So again, what's the reason for the spread size width to be different on the call side?
So it has to be different to be able to have no upside risk. It has to be skewed. So for example,
that's why it's causing the skew. Okay, got it.
Correct. That's why we had a skew. So in here, it's a higher delta. We did it at the 30. It's a 29 now, and so space is the same. This is a 5-point wide, and we're going to receive, let's just say 175 or something here, but the max loss is 250. So we would have to collect at least more than that on the put side. And we did. We collected significantly more than that at the 15 delta, doing a 60-point wide. And after the whole trade is done, we received about 300, obviously, $300. And then if it shoots all the way to the upside, because it's skewed, the most we can lose on that call side is 250. So even if it continues to hit all-time highs every day for the next 36 days, we still can win $50 on this trade. The only way we can lose, obviously, if it goes down, and it goes down quite a bit, that's how we can lose. But yes.
I'm sorry. No, what did you put the mid at to get filled?
On the ES?
Yeah, and the one you're on right now. Yeah.
625.
625. Okay. Thank
Yes.
you.
You're welcome.
Well, I understood the distance from that from the at the money is causing the skew, but the width you could have gone wider on the call side and still had no upside risk, right? Likely, or
we could have went maybe. No, we couldn't have, because you can see that the increments are 5 points, right? So if we go to 10, on the call side, then that means the most we can lose is 500 on the call side. So we couldn't go more. We couldn't, based on the strikes that they have, the only thing we can do is a 5-point wide. Unless if we did a 10-point wide, the most you can lose is 500, because it's 50 times 10 is 500, right? And then we would have to collect more than $500 to have no upside risk. So that means we would have had to do some wider spread on the put side, or did 2 puts on the put side instead of 1.
you did a 60 wide on the put side, right?
Correct.
Oh.
So what are you understand? You understand why I did it? Why I'm saying we would have to do more than 1 put to be able to have no upside risk if we did a 10-point wide?
No. So I'm seeing the risk here is, yeah, can you explain that again?
Okay. I asked that question because I'm sure, Steve, if you're having a problem, others are having a problem with that as well. So the denominator for this, everyone, it's $50 for the ES. It's not 100. This is an option on the future, so the denominator could be different. On options on stock, it's always 100. In this case, it's $50 per point. This is a 5-point wide spread right here. This is 5-point wide. So you go 50 times 5. Okay, that equals the 250. That's the max loss that you can have on the call side, not including the premium that you receive. So if you receive premium of 250 or more, then you have no upside risk. You cannot lose to the upside because the most you can lose on this upside is 250. We collected, by selling a 60-point wide put spread, we collected a total of 300 when we did this trade. So even if we lose completely on this here, we're still going to be able to make at least $50. And you structure that in a way, you structure it based on the trade that you're doing. So for example, let's say if we were doing this again, we sell that and and let's say this is the only trade we're doing, right? Well, we're receiving, it's jumping around. I'm gonna lock it here. Let's just lock it and let's put it at 150 because it's jumping around like that. All right, so where 150 is it's not 150, it's $75 because it's half the size, right? It's only $50 a point. So this is $75 we're receiving. The max we can lose on the call side from what we received right now, if we only did this, was 175, right? It was 175 because we receive, the max you can lose is 250 minus the credit you receive is 775. So the max we can lose is 175 on the call side, right? But what I wanted to collect is at least 250 because that's how much you can lose on this without the credit, okay? Without the credit. So I wanted to receive at least 250 so that I can win on the trade at least. I don't want to do a trade that I have if it shoots all the way up and I can still lose. I don't want that, right? I want to, in this case, I want to be able to win by having no upside risk if it goes up. And so that's why on the put side, you can see this is collecting 75. And if we go to this put side and we add this back up, right? We sell this and now we buy this. This is giving us $233 by itself on the put side, okay? 233 on the put side. We receive 75 on the call side, right? So that's where we got our 300 from. That's where we got our 300 from that we were talking about. But the risk is to the downside. Obviously, we can't lose to the upside, but we can lose to the downside based on this spread. Okay. All right. So is that clear, Steve?
Yes. So it's determined by the amount of premium we are getting from the put side, right?
Exactly. You have to get enough on the put side to make sure that you're receiving at least 250 total premium. So then that way you cannot lose to the upside. And then, but the trade is a very high probability trade for us because we're receiving $150 and that's all we're trying to, we're receiving $300 and that's all we're trying to do is get out of it at 50% profit. So if the ES kind of settles down and premiums start coming out, we can get out of this trade pretty quickly with 36 days to go. We can get out of it probably in 20 days.